And a reminder, use risk capital you can afford to lose if you're playing this game. It's a risky business. Go to our website and check our disclosures and our disclaimers. This is an educational room, and this is E for eminywizard.com and marketwizards.com. Okay, this is a 15-minute chart. We looked at the 30-minute chart, and this is a little bit tighter look. And by scrolling through a few of them, you can see which one looks the cleanest. And this is our base chart, the 15, and this is clearly the cleanest chart. And it's still supportive above the blue line. If you've been able to buy high, sell higher, make sure you get paid coming into this 82 to 83. We know 85 is our demon. Said I'm not expecting a big plunge, but it's hard to imagine another big push right now as well. So I think range type trading is the best approach right now. And even a marginal high, you've got to be careful of top of the yearly box right in here at 90 and a quarter. So word to the wise, don't think of these. I'm not going to think of any of these as anything more than hit and run type trades. And I would advise spread your trades out. 15-minute chart. This is a beauty. Look how rain supported us yesterday. Back down here, we said, all right, 28 support. And we kept moving those up. Right? Then the 38. So we have really migrated in emotional, fairly light volume, obviously, all night long. And my belief is that morning after trend day has already played out, and doesn't mean we can't get a new high, but certainly we have to consider from where we were to where we went overnight. That's morning after trend day and a substantial push. Demon, 85. Make sure you pay the 82s to 85s if you are long. And if you're sidelined and not playing, that's okay. Remember, the goal is to take something out of the range. It's not to call every little wiggle. Try to go with the flow when it's moving. This is a great trade. Anybody who took this 72 support trade. And this is for a retest failure, obviously. Can we test the highs and hold, or can we keep on going? First time back here, double top. Make sure you're paid. 82s to 85, gravy above. Let's take a look at another chart. Very helpful chart right here. 15-minute chart. And if you look at the RTH chart, it's hard to see anything going there. This is your RTH chart. And it's hard to use moving averages. We know we're very far away from where we were, but you can't tell what's pushing this right now. Certainly not on a 5. And I indicated earlier, any new highs, be very wary about continuation. Meaning marginal type highs. Okay, and this is the top of the pipe. And this blue circle is the box that we are now fighting. We'd said yesterday the boys want to get it above that 66, so we know we're on a breakout from that high, and that target is actually in the 2800s. Around 2806 would be the first one, I believe. For now, we're just going to go step by step. And the 90 and a quarter to 92 is the first primary resistance that I was looking at, which is why we use that pre-market for profit taking. Until broken, that's resistance. And then 97 and a half will be our next potential next target above that. And we don't have to go any higher. I just think that there's some trap shorts that are being squeezed first. And that's been part of the problem for those overnight who got caught and have been squeezed up here. Don't overthink this. Try to get on the scoreboard, grab a few points. I don't believe the high is in yet for the day. Could be totally wrong. I just think that we can run a few more stops. That being said, sometimes you have to go backwards to go forwards, take a couple steps back. If you are truly a position swing trader and you don't mind risking a few points, you hang on to a trade for a little bit longer. I've advised hit and run, meaning be happy with the small miracles we get. Now, this is the corrective move, right? From the high down to the low, and now the bounce move, and we've held the 2,700. Obviously, this 75 is a very important marker based on this range. So the 32s we talked about yesterday basis this range are intact and support for now. And we've been able to get up into the next box. And so this is really our resistance box for now. And when we get back under 75, if we get back under 75, let's put it that way, then this one will become our fighting box. For now, we know this is our resistance. We know this is our support box on a 3-box move. And we know this was the fighting box that has been resolved to the upside. So now we've got to look basis this chart back here. And that's a breakout. So I think play hit and run if you're going to play this morning during IB. A lot of emotionalism out there. My guess is even if we do get higher, we're still going to be subject to backing and filling. Yesterday we looked at this chart and I said clearly we can see the importance of this 2603. This was the long leg from the last elections. And we said that this area right up in here, the middle of this box, is probably the target, the 75 area, and then whatever they can get, if any, above it. And when everyone was crowing about the Trump administration, how do you feel now about electing this guy and whatever? And we just said, okay, we're going to use this for support for now. 3 boxes back from this long leg, just an educated guess, nothing more. And then we've had this push, and at the 17, we said, okay, there's a hidden pivot, very important for this scale. And that's intact. So realistically, that 17, we called it 18, and then the 28 support, and then the 38 support. Don't make it, any more challenging than that. Everybody tries to make this business difficult. We got the spaghetti charts and everything else. Learn to use this. This is the e-widget. And the key is being able to open your mind up and use this on all different size boxes. And this one is done very simply from measuring back here. Just put the numbers right into your e-widget. Put the low, put the high, and everything else takes care of itself. And this is a 60-minute chart. Note how we go from one extreme to the other. And we can see yesterday where this caught hold right here. push. Best thing about this business, you don't have to know where it's going. You have to have a general idea. It's like a GPS in your car. You know you're going to a certain destination. You're not exactly sure when you'll get there or if you'll get there, but you think you're going to get somewhere in the neighborhood. And that's what we try to do with trading. If you see things that help your trading, you come to a chart like this, say, okay, well, that's a channel, that's a trend line. Try to touch at least 3 points. Doesn't have to be exact, but it should give you somewhere in the vicinity of a structure that your mind can see. Give it some kind of structure. Now we know the 85s are kind of an important idea, and usually we have that dance we've talked about before, 82s and 88s and 85 middle, and this is being resolved right now, obviously. And I say two-way day. Those who like the trend type trades, obviously you're going to buy pullbacks. And don't fall in love near the highs. Morning after trend day is the concept of trying to take out the prior day's high or previous highs and then see if there's anything left above. In this structure, we're looking back here, 66, very important idea. All right, that was taken out. So shorts have to break that and come backwards for any posture whatsoever. And I say that will happen in due time. And here's Facebook. Look at the games that have been played with Facebook. Talk about trying to move the markets. We said, you know, unless the leaders are leading, hard to imagine market going up. And look how they've taken something like Facebook in the last 8-10 days and pushed this back up. Gaps all over the place. Core is in here, 147 and a quarter to 152.5, 49.75 the middle. So that's the current trading range with a gap below down in here, just below us. And this gap up here has been closed. Still got a gap up here. So I say anybody with common sense today is just going to think about two-way trading, try to grab a couple points, and if you have a trailer, try to make a couple more. At the double top, anybody who shorted that 87 zone with 92 stop behind it, make sure you are paid coming into the 78 to 75. And we said today we are going to leave some chips on the table. That's inevitable. Take what we can day. Right now, market's trying to build a high level base. If we undermine the 73s, then we can come back, test the 71s and lower. First things first. Market is waiting for the RTH chart to catch up. So don't go assuming just you can plunge right now just because we're starting to fall backwards here. Still range type trading. And this is what I mean by we were waiting for the moving averages to catch up because we're so stretched. This is the 5 RTH. Take whatever gifts we can get today. Today is going to be a very challenging day because of the egregious nature of the overnight slam. And also because of the run for a few days too. So do not think that today is a cakewalk and just close your eyes and buy. And don't think you can, and the worst thing you can do is just think we're going to plunge, because that's not in the cards either until we get some rotations and start to see a pattern of lower lows and lower highs. Just not enough information other than we know that risk reward is coming in up here near that 90.